Hello and welcome to this Forex Preview at xm.com. I'm Marios Hatchikiriakos, and joining me today is lead investment analyst Rafi Boyajian. We'll be discussing the Bank of England policy meeting on Thursday and the potential reaction in the British pound. So Rafi, it's going to be a huge meeting. The markets are pricing in a minor rate increase, but the economists don't look so certain. I'm leaning towards a rate increase since the Bank of England hasn't pushed back against market pricing. But how do you think this meeting will play out?
Well, Mario, there's certainly a lot of uncertainty about what the Bank of England will do on Thursday. So it's not just economists that are split. The MPC appears to be split as well, because although we know for certain that at least 4 MPC members will likely vote in favor of a rate hike, because we have heard from them recently. We also know that 3 members will likely vote against it, or they're unlikely to favor such an early rate hike at this month's meeting. We haven't heard from the other 2, so it could really go either way. But markets are slightly edging towards a rate increase, economists not so much. But the reason why we would probably see a rate hike is because the bank has really become worried about inflation expectations. They're scared that at this rate, inflation expectations will become unanchored from the 2% target. We've seen both consumer and market-based inflation expectations spike quite significantly lately. And they do think that the economy will be able to take a rate hike. We've had some fairly solid PMIs lately, even though overall they've eased from the peaks after the spring reopening. House prices are very strong. So overall, it's not looking too bad for the UK economy, but investors see several risks for the UK economy. They think the surge in energy prices combined with a broader rise in inflation will eat into people's disposable incomes. This would hold back consumer spending. Businesses are also struggling from worker shortages, particularly truck drivers that are causing widespread issues across the country. And now there's also the energy crisis. And on top of that, of course, we've got the ongoing woes from Brexit. So they do think that raising rates too early would do more harm than good, especially as it's already too late to control the current surge in inflation. And also the fact that inflation will probably start to come down on its own at some point next year.
All right. And with all of that in mind, if we look at the bigger picture, the markets are pricing in another 4 rate hikes after this one by the end of next year. Now, that sounds a little aggressive to me, considering the shape of the UK economy and the risks you just outlined. Do you agree that that's unrealistic? And how do you see the pound performing overall?
Well, there's definitely a lot of risk that markets have gotten a bit ahead of themselves. And that's probably the main worry for sterling going into this meeting, because it's not just the decision itself that will affect how markets respond, but also the projected rate path that will be unveiled in the bank's latest quarterly outlook report. So even if we do get a rate hike on Thursday, they go ahead and raise rates by 15 basis points. But the Bank of England, nevertheless, isn't predicting as steep a rate hike path as the markets currently are. Then we could potentially see a knee-jerk increase, knee-jerk jump in the pound, but then we might see sterling fall back afterwards if the BoE isn't as hawkish as markets are currently expecting it to be. So I think we will probably see quite a bit of volatility on Thursday.
I think that sounds about right. Rafi, thank you so much for joining me today, and thank you everyone else for joining us here at xm.com.